Lilly just crushed it up 7% today. But here's the thing, the semiconductor sector got absolutely hammered. Qualcomm, Texas Instruments, Analog Devices, all down double digits. So what's really happening in tech right now? Let's find out what it means for you. Let's start with the indices. All right, so the Nasdaq had a rough day. Down about 0.25%, which doesn't sound like much, but here's the context. We're looking at a weekly loss of 4.6%. That's the real story. Tech got beat up, and honestly, there's some profit-taking happening after what's been a pretty strong run earlier in the year. Semiconductor names especially took it on the chin today, which is dragging the broader index down. Not a great day for growth stocks, but we're still in a holding pattern. Now the Dow, interestingly, slightly down today. Just 0.09%, basically flat. But here's where it gets interesting. The Dow is actually up 0.6% for the week. So you're seeing a real divergence here. The Dow is holding up better than the Nasdaq. Why? Because the Dow has more exposure to value stocks, industrials, and some of the older school names. When tech gets shaky, defensive positions tend to outperform. That said, it's still a mixed signal. We're not seeing a clean risk-off move. It's more like selective weak. Now here are the top movers of the day. Texas Instruments got absolutely crushed today, down 8.46%, trading at $285.42. And for the week, we're down 11.6%. Ouch. That's a big one. The semiconductor sector is getting hit hard. There's some uncertainty around demand, maybe some inventory digestion happening in the channel. Earnings concerns are probably floating around too. When the chip leader stumbles like this, it sets the tone for the whole group. Qualcomm's in the same boat, down 7.57% today at $189.39, and down 16.24% for the week. Yeah, that's a painful week. Mobile demand questions, smartphone cycle concerns, these are real headwinds for Qualcomm right now. The fact that it's down more than Texas Instruments on the week suggests there's specific concern about their end markets. Not a great signal for the tech cycle. Analog Devices is also struggling, down 7.42% today at $386.91, weekly loss of 10.94%. Same story as the other chip names, sector-wide weakness. But ADI is a bit more diversified than Qualcomm, so the fact that it's getting hit similarly suggests this is a broad semiconductor pressure, not just smartphone-focused. Industrial demand could be slowing too. Now here's the bright spot, Eli Lilly, up 7.13% today at $1,208.12 and up 9.97% for the week. This is the divergence we're seeing play out. While semis are getting crushed, biotech is rallying. Lilly's got momentum in its weight loss drugs. GLP-1 space is booming, and there's real revenue acceleration happening. This is where money's rotating to away from cyclical tech and into healthcare growth stories. Microsoft had a solid day, up 5.71% at $372.97, though the week is only up 1.69%. So today was a good bounce back. AI, cloud, enterprise strength, these are the tailwinds for Microsoft. The company's benefiting from some flight to quality right now. When a market gets nervous about semiconductors, people move toward the big tech names with recurring revenue and real earnings power. That's Microsoft in a nutshell. Now, let us look at energy and fuel. Oil slipped again today, down 2.34%, sitting at $70.24 a barrel. And if you look at the week, we're down 8.3%. That's a pretty meaningful pullback. Supply concerns seem to be easing a bit, and there's probably some demand softness baked in here too. Geopolitical tensions haven't kicked into high gear, so we're not seeing the panic bid. Just steady selling pressure. Not a crisis, but definitely a reminder that energy is softening heading into the summer. Natural gas down about 1.5% today at $3.29. But here's the flip side, up 1.86% for the week. So there's some support underneath this. Probably seasonal demand kicking in as we head into summer cooling season, and storage levels matter here too. The trend is mixed, which tells me the market's not convinced prices are going higher or lower in the near term. Just choppy trading. Moving on to metals. Gold had a nice day today, up 1.8%, sitting at $4,103 an ounce. That's actually a solid move. But the week? Down 2.87%. So this is a bit of a bounce back after losses earlier in the week. What's interesting is that gold's moving higher while the dollar might be stabilizing. This usually signals a little bit of nervous money, safe haven demand creeping in. People are hedging. Not panic, but definitely some caution out there. Silver's doing something interesting. Up 2.14% today, that's actually outpacing gold. But the weekly story is rough. Down 10.04%. That's a big move. Silver tends to follow gold, but it also has industrial demand tied to it. When tech gets hit like we saw today, with semiconductors, that industrial demand can soften too. So you're seeing some mean reversion today, but the week's losses suggest investors have been rotating out of the more economically sensitive metals. And finally, let us look at tomorrow. All right, so here's what we're watching heading into Monday. We've got a lot of conflicting signals right now. The Fed's still talking about rate hikes. Neil Kashkari just said he expects one this year. That's hawkish, and that's keeping some pressure on growth stocks. At the same time, you've got warnings from Jeremy Grantham about valuations being at historic levels. That's noise, and it's real at the same time. OpenAI's delaying its IPO too, which takes some froth out of the market. Monday is going to be a lighter day with the holiday week ahead, so don't expect huge volume. Just keep an eye on which sectors hold up. If semiconductors bounce back, growth has legs. If they roll over again, expect more money to flow into defensive plays like healthcare and staples. The Dow holding better than the Nasdaq is your tell. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.